How many properties do you have?
Yeah, so I have 12 rental properties right now.
Wow. What did you ever, when you started this journey, did you ever look back and go, man, I'm going to get to 12 and keep going?
Yeah,
Hey, this is Scotty from the Gifford Group, and today we got a special guest with us today, Daniel Tanasas. To Daniel's story, going from real estate rookie to real estate pro, and some of the takeaways that he's learned. So, thank you so much, Daniel, for having joining us.
yeah, thank you very much for having me, Scotty. Pleasure to be here again.
So I met with you before, and we had lunch, and I had a really great conversation, and I really enjoyed like learning from you as well. And I'm a real estate investor somewhat myself, but like you, it seemed like you really just dove into this and like have just taken the bulls by the horns, as they say. And so, just give me a little background on like your story and your journey to become a real estate investor, and what kind of took you down that path.
Yeah, for sure. I moved to the States in 2018, and after that I moved to Houston like summer of 2019. I started working oil and gas here. I always like try to figure out what I want to do with my free time, trying to find the side hustle kind of thing,
Mm-hmm.
either start another business. And yeah, I did a lot of reading and finance books and stuff. I was looking into like stock market trading and stuff like that. That kind of didn't resonate with me. And
Mm-hmm.
every single book was kind of leading me towards real estate market. I felt like that's way too much for me because I don't know anything about building codes here and like over in Europe. I'm from Romania originally, so over in Romania and Europe, you usually have those thick wall brick houses, and yeah, here you have stick houses. I don't know anything about that. That's too complicated. Eventually, like as I said, just keep reading stuff. Everything was pointing to like the best wealth creating instrument in the United States. It's pretty much home ownership and real estate investing. So eventually, I decided to give it a chance. I saved some money, just bought my first rental property the traditional route, saved some money for a down payment. I went actually on bigger pockets, found an agent that it's investor friendly. She's actually my broker right now, so I'm really happy to have found her. Her name is Judy. So yeah, she helped me buying my first property, and just a regular buy, 15% down, a conventional loan. After that, I saved some more money, bought the next one, saved some more money, bought the next one. And after the third deal, probably I start doing some more creative ways to be able to buy more properties with lower down payment, because you can only save so much. Like if you have to save 15-20% for each house, you can only buy so much. Like you can maybe probably buy one or maybe two a year if you like really live below your means, and you save
Mm-hmm.
a lot. So yeah, that's pretty much how the journey started.
Oh, that's awesome. It's so such like a, it's such an amazing story to hear, like coming from a different country and then like, going, okay, well, this job that I have isn't fulfilling me and providing me like what I want. I want more out of this, right? And you came to, I love to hear that story when people are overcoming like barriers and coming into the country and then taking action, right? And reading. And so I'm curious, like I have so many questions, but like first let's start off with like what made you transition from the real estate investor to actually getting a real estate license?
Yeah, so I it's pretty much it came natural because I started having a couple of properties. I started having a little bit of success on the investing side. I wouldn't call it like a success, but yeah, I don't find a better word, so I'll just call it like that. And
Sure.
I started having friends coming to me and asking me questions about real estate, about property, what kind of finance did you use, how did you structure this deal. So I was like, yeah, I mean, I got some knowledge out of it, so I might as well just help others and make this my full-time gig, helping others to get through the first steps of finding their investor path. So yeah, that's pretty much how I kind of transitioned from an investor to like, yeah, I'm really passionate about real estate. I want to do this for the rest of my life, and if I am in the market, I might as well just yeah, help others to be investors as well.
Awesome. Yeah, no, it's great. I love the idea too of helping people who don't know, right? And helping dragging them along, right? So I'm sure your broker, right, helped you a little bit and gave you some knowledge. And you said you liked the taste of it. And you said, I want more of this. And so you decided to jump into, but not everyone has to be an actual realtor to invest, right?
For sure, yeah, you don't need to be a realtor to invest. That I was not a realtor to when I bought my first 3 houses, so that's something that like you work with a realtor to guide you through all the steps and all the pitfalls to make sure you don't fall in them. But you definitely don't need to be a realtor to invest.
Yeah, but so if they are interested in like, we'll put your information but later, but like they could reach out to you too if they are interested in learning more about real estate investing themselves, right?
For sure, I would be happy to help. That's pretty much now. I would say like 80% of my clients are going to be investors or either starting out or buying their fifth, sixth, seventh property.
Wow, awesome.
Yeah, like buy and hold, and I work with flippers as well that are just buying properties and after that fixing them up, selling them. So that is pretty much my niche.
Awesome. So what do you think would be like one of your biggest like lessons learned on your real estate journey? Like if you could like, hey, just pour into somebody right here for a little bit and say, "What this is something I learned that I wish I'd known."
I think the biggest lesson that I wish I have known when I started out is that like when you listen to podcasts and read books and stuff like that, everybody is like, yeah, money is not as important. Like if you find a good deal, the money it's easy to find. The money is everywhere, and I felt like that it's a little bit disingenuous, but because
Hmm.
I kind of came from a scarcity mindset. Like I had to save all the down payment, have the money, put the down payment on the house, and after that I can buy the house. So it didn't really click for me. How will the money come if you find the right deal? And it took me a couple of like maybe after my fourth deal that I kind of started understanding how you can leverage the banks and the lenders and hard money lenders to be able to finance up to 100% of your purchase price, which can turbocharge your acquisition. And instead of buying 2 properties a year, you can buy 6 properties a year.
Yeah, no, that's amazing. If you can find, the right using the right tools. We always say having the right tools in your tool belt allows you to do things that you might not be able to do, right? Like if relate it back to construction, like if all you have is a hammer, well, it's going to be pretty hard to, build a fence. If you need the saws, right? You need the shovels. And so having all those tools in your tool belt as you go through the journey is definitely going to help you out. That's definitely, figuring out the money thing is definitely going to be our strat. What's the strategy that you use when you are buying a property?
Right. The ideal scenario is that you have to know each strategy a little bit at least. And whenever you look at the deal to like go through like, is this subject to possibility? Is this seller finance possibility? Is this uh, buy and hold for like maybe I can buy it with hard money, fix it up, like a BRRRR strategy, buy, rehab, rent, refinance, and repeat.
Mm-hmm.
So is that a BRRRR possibility where you can fix it up, pull all your money out, and reuse the same funds to buy next one and next one? So you pretty much want to know all these possibilities, and whenever you look at the deal, you decide on the spot, like, yeah, I think this is the best way to go for this deal is going to be a BRRRR. And personally, for myself, I would say the BRRRR strategy was the one that I implemented the most. I got my last 8 properties, I would say, with the BRRRR. So yeah, that probably was the strongest one that helped me really go faster than otherwise. Also, I have some seller finance properties that work pretty well. So that is something, uh, same thing. That property, I probably wouldn't have bought it unless they could seller finance it to me. And when interest rate was so high, interest rate was like 7-8%. I just the seller wanted way too much price or too much, yeah, way too high of a price for that market to make sense. But I negotiated with him good terms, and I got it at a 2.6, I think, interest rate. So those kind of terms that you can negotiate with the seller are gonna make it work. So yeah, pretty much trying to listen to as many podcasts and other investors and learn a little bit of all these strategies. And whenever something comes up that could be a good fit, you just go for that particular strategy.
Yeah, no, that's a good takeaway there. Trying to figure out when you approach the problem, figuring out how the best approach to make this deal work or make it turn into something that's useful for both you and this person selling, right? Because it's got to work for both people, right? For a deal
Right.
to work. That's awesome. So I have a question about. So I know I've bought my last investment property using a DCRs loan or a debt servicing covered ratio loan. Have you bought using that type of loan before too?
Yeah. So I bought my first 10 properties with conventional. I try to max those out because uh, Freddie and Fannie, they only offers you up to 10 loans conventional, and after that you have to go to this either DSCR loan or to some other types of loan. Probably DSCR is going to be the best rate next to the conventional, so it's going to be maybe a little bit higher, but not that much higher. So yeah, I used it before. It's a great tool. It's sometimes, not all the time, sometimes could be like a lot of documents required for this as well, but sometimes and theoretically it should be a little bit less headache, and you're not going to have to provide your taxes, you're not going to have to provide all kinds of documents you are going to be required to provide for a conventional loan.
Yeah.
And yeah, they're going to only look at the property and at the income. But I'll let you speak about that since you are a lender and you offer that product, I think. So yeah, please tell us about how
Yeah,
that
no,
works.
I was a real estate investor first using that type of loan because I, didn't have the income or, the W-2 income anymore because I went from a W-2 job, to a realtor. And so I was still wanting to buy a property. And so it's much easier to buy using a DCRS loan because it's not looking, like you say, it's not, you just said, you're not looking at my income, you're looking at the property. Does it make sense from a cash flow standpoint? Is there enough rent to cover the mortgage basically, right? And the taxes and insurance and HOA. And if it is, and we usually look at the ratio, and that ratio, we're looking for say like a 1.25. And we'll use the easy example. And numbers aren't realistic, but just to make it simple, if your all-in cost is $1,000 a month and you're renting it for $1,250, well, then now you have a 1.25 ratio because you have the extra 25% in there. And so it makes it easy to qualify if the ratios make sense. And it's not so much looking at now the investor and saying, well, do you have enough money to cover this? It's like, no, the rent's covering it. So it makes it a much easier product. And the rates are very competitive compared to conventional. They're obviously probably a little bit more because they're not doing as much digging, but it is a nice tool to allow you to keep buying the properties when you either run out of conventional or you just don't have the, proof of income to do it. So you just have to have the down
Exactly.
payment, but it is a great tool. So yeah, so if it sounds like yeah,
Also, something to keep in mind, especially since we were speaking in our previous video, that the rents didn't really keep up with the prices going up so much. Actually, a lot of lenders, and I'm sure you worked with them before as well, are willing to go sometimes for a 1-to-1 ratio. And
yeah,
sometimes I actually got a couple of loans that were negative amortization. So they needed to be like 0.8, so my rent could be lower than my monthly payment. And they will go usually for the appraised rental value. So, and I usually have a higher rent charge because I either do like Section 8 or some other kind of strategy that I'm going to be able to get higher rent, but they are not going to consider that. They're only going to consider the appraised rent. So in
yeah.
that scenario, even though I was cash flowing on paper, I was on a negative DSCR. And luckily, some lenders are going to go negative DSCR as well, which helps us to keep buying. So you're not getting stuck when you are in that scenario. It's going to be a higher interest rate, higher than like a positive 1.25. That's the ideal scenario, but at least it's still possible, and it still allows you to move forward.
Yeah, yeah. Well, I think we actually go down to 0.75. So it's the lowest that we
Right.
can go on the
Even
ratios
better.
for us. So yeah, so like you could totally do that. But I was just speaking in general is that you want to look at, making sure that the rent kind of covers your cost is kind of the idea. But 1-to-1 ratio is fine, like say, and you usually have the stipulations. You have to either bring more cash or you have a higher interest rate. So, there's always give and takes on what you're doing. And so depending on if it's best, how we always work with the buyer too to say what are you trying to achieve right here, and then we can look at what type of loan you're looking to get. So definitely good information. So, I mean, you said something there, and it kind of like I didn't even know this. You said, and I want to bring it up. You know, you said, oh, when I got to my 10th property. So, how many properties are overall in your portfolio? How many properties do you have?
Yeah, so I have 12 rental properties right now.
Wow, I mean that's. I mean, what did you ever when you started this journey? Did you ever look back and go, man, I'm going to get to 12 and keep going?
Yeah, no, I'm really grateful for for the fact that I got to this number. Yeah, it's actually unbelievable. I just have like a little bit over 3 years since I bought my first one, so it's been yeah, great, and yeah, I can't believe that it was so fast, because when I started, like just starting out, putting all that, saving up those 20% for the first down payment, I thought it's going to be 10 years maybe until I'm going to get to my 10th property. And 3 years later, I just passed that point. So yeah, I'm really grateful about that. And that's the power of finding creative ways to come up with that down payment. And pretty much the BRRRR strategy was my bread and butter for turbocharging my portfolio. Like in first 2 years, I got 6 properties total, and
Mhm.
last year I got another 6. So that last year I actually doubled my portfolio. Actually, last year was a really good year for me. I
Wow. So,
really
so even
doubled
though
it down.
everyone else is sitting on the sidelines, Daniel's over here buying 6 more rental properties for himself.
Yeah, pretty much. That was actually a advantage, because a lot of people were scared on the sideline, and I was always in the mindset that as long as I can either break even or make a little bit of cash flow, I am good to go, and I want to buy more because I know eventually interest rate is going to drop and I can refinance all those out. And if it's breaking even or cash flowing even a little bit at a 7%, 8% interest rate, for sure is going to cash flow $300, $400, maybe $500 at a 5% interest rate. So I was like, as long as I can find a strategy to rent it out and break even or make a little bit of money, I'll buy as much as possible. And a lot of people were on the sideline, which made my offers more appealing, and more sellers were willing to accept them.
Yeah, no, it sounds like you've done really well for yourself, and I'm I I think the average landlord owns 1 or 2 properties. So we got up to 4. We sold 1 last year, so we're down to 3. But like meeting someone that has 12, and not everyone that is going to watch this video has got to get to 12, right? I mean, I always heard if you get to 4, like that's a great number to be, because you can still, if as long as you still got your day job, and now you got this other thing over here is a great hedge against inflation, and it's probably going to double. We know that real estate properties usually double in value every 15 to 20 years on average, right? So it's like whatever you have that property in, if you bought a $200,000 property, now it's going to be a $400,000 property in 10 to 15 years, and if you're able to cash flow through where you're not really putting your money into the deal every month, where the tenant is covering the mortgage and paying the taxes, and so now you overall are building wealth by using someone else, allowing someone else to do that for you, right?
Exactly. Yeah. As I said, like even if you find something to break even, you're not actually breaking even if you're looking at all the ways you're making money with real estate, because you have that mortgage pay down, like every month the tenant is paying the mortgage and paying the loan down. Also, you have the appreciation long term, and after that, the third way you make income in real estate is the cash flow, which could be or not be there. Which, if you have like just breaking even, that's still fine because you make money the other 2 ways. So it's still a powerful way to go about
Yeah.
it.
Well, and the advantage that I like the most, actually, to be honest, is the fourth way, which is the tax breaks using the depreciation, right? So the depreciation has always been really good for us because it helps us offset some of the other income, because we have this loss now on paper, right? Even if we didn't lose money, quote unquote, from the cash flow, we lost money because of depreciation, which is this phantom loss, really, because the idea is that with residential real estate is that the property's value is lost over 27 and a half years. So each year you get to take away a little bit of that, its value. And so depending on how much you put into it and when you purchase that, it's based on those things. But it's definitely another fourth advantage. And I think that
Right.
actually the biggest one, the most people kind of forget about too, is the fifth one, which is leverage, right? Because you're not buying the whole thing, right? So even if you only gain 10% in the market, if you only put five or, even in your even investor's case, you put 20% down. Now it's still 5-to-1 ratio. So instead of you had a 10% return, well, now you actually had like a 50% return because you're leveraging that money up, right? So I think overall, it's just a really great strategy for people out there to look at the idea, even if they're not going to become you and become, get 12. Even if they get one or two, right? It's still a great strategy, and I would still recommend it to people overall. And that's why I wanted to bring you on and have this discussion with you in person, and just, be a little bit of inspiration for people out there of what you can do if you really put your mind to it and you go all in on it. Or you can be, just kind of, just do one a year even, right? Because even that will still help, right? So even if you don't have all the strategies or know all the knowledge, just getting out there and buying the first one is your first step, right? So
Right, I agree. Yeah, and like nobody's gonna start this and know all the strategies and look at the deal and like what kind of strategy I can go about it and all that. Like you usually go slow, start with one, buy it conventionally, and one strategy that I love, I think it's a great way to start this out, is to do the house hack method. Especially this year, I mean last year. I'm still not used with being in 2024, but at the end of 2023, they changed the regulation for conventional loans. So now you can get up to a fourplex, anywhere like duplex, triplex, or fourplex, with only 5% down with a conventional loan, where before for a fourplex you needed at least 20% down. So if as long as you live, as long as it's your primary and you live in one unit, so that is a really great way for a young investor to start out and like just buy a fourplex, move in one unit, rent the other three out, buy, I don't know, $500,000 property or $800,000 property with only 5% down. That's a really small amount of money that you need to save compared to the big asset you're buying. And if you keep doing that every year for 5 years, you have like maybe a $4 million portfolio, like with a pretty low headache and low amount of down payment. So I think that's a really powerful strategy to go
yeah.
for. And that's actually something that I'm still doing. I moved from my previous house last year. I live now in this house. Probably at the end of this year, I'll move again and buy another house with a conventional loan with a 5% down payment. So I'm still doing that. I think it's a really powerful strategy, especially when you are not really tied up to like schools and kids and stuff, when probably it's going to be a little bit harder. But now, if you can take advantage of that, I think as a young investor, it's the best way to go about it, and buy as many as you can, like every year buy another property, and just snowballing that is going to be a great wealth creator long term.
No, that's amazing. Like that is a great strategy to have. I like the house hacking too. Even if you're not even buying the fourplex, even buying the single family and then having a roommate, right? Which then helps pay the rent. I've heard so many
Exactly.
podcasts too, and like just having the roommate, which then helps, offset your mortgage, or someone else is helping paying rent, right? And I think a lot of people think the idea, well, I can't have a roommate. Or, well, if you have a big enough house, or you're in a 3 or 4 bedroom house, like one extra room and sharing a kitchen ain't that big a deal. Like everyone grew up with parents, right? They had to share the house. It's just the same thing. You go off to college, you got to get your roommate. So it's like there's not a lot
For
of.
sure.
I mean, the idea of sharing is, I think it's sometimes like, oh, I don't want to share, but like think long term, right? Don't just think about your short term, because you can move out, and then if you have the second property, now you bought another property and you got someone paying for the first one. So because you move other people in there. So it's like I think the idea is just you continue to look for ways to keep your costs down so that you can invest in real estate, and then uh, really just keeping the snowball rolling forward in your direction, right?
For sure. And you can even use that in your advantage. Like you can just get your buddies to live with you, and like, hey, I can rent you a room, and you have your college house at your home. Have
Yeah.
everybody over, and it could be like a lot of fun, and you're making money out of it. So yeah, just think
Yeah.
about creatively about it, and you can definitely make it happen.
Yeah, definitely. I had a coworker who did that. He bought a house and he rented out the other 3 rooms to his coworkers, and they all
There
work
we go.
shift work, right? And they never was everyone was kind of working different schedules, and they're gone half the day anyways, or sleeping the other 8. So it's like you only had to deal with them 8 hours a day anyways. So he ended up making a lot of money off that house, and he basically lived there for rent free because they were paying all the rent. So he had very very cheap, so he had a bunch of his money to do whatever he wanted with. And I don't know if he went and
Exactly. And
invested again, but
a smart way to go about it is to just like save those money for your payment, for your monthly payment, as you would have to pay them. and just put them on the side. And 1 year later, you're going to have a down payment for the next one, and rent this out completely, or find another person to live in your bedroom and move to another one, and find other people to like house hack with there as well, and growing that way. So there are many different ways you can play this, and you have to just go out for it and start doing it.
Well, awesome. Well, I think so. I'm gonna so Daniel, so that was really great interview, and I really enjoyed everything there. So I think now would be a good time to say, hey, well, how can they get in touch with you if they are interested in becoming a real estate investor or buying their first property, or maybe they already bought 2 or 3, but they're looking for the right realtor to help them find one more.
Sure. Yeah, the best way to reach me is going to be on my email. It's daniel@thisisliving.com. This is living without a G at the end. So daniel@thisisliving.com. It's my email, or on Instagram, I think it's Daniel.Tanasa, but you can put the
We'll
link in
put
the
the link.
description.
Yeah, we'll put the
So
link and we'll
they
put
can
your
reach out that
email.
way.
Exactly. We'll put them both down below so they can reach out to you. And is there any other things, a bit of advice or anything else you want to wrap in there for? Wrap it up.
Yeah, I would say just start doing it. I know there is like sometimes so much information in this space, which is great that we have access to so much information, but that sometimes can be like overwhelming, and have that analysis paralysis, and just looking at everybody doing it, and feel like you are not ready, feel like you don't have all the knowledge. You definitely don't need all the knowledge in the world. That's why the realtors are here to help you guys, actually. So just make that leap of faith and start buying a property in a good area, and it's going to work out. Just go for it.
Awesome. Yeah, no, I think the same thing too. Like, you don't have to know everything when you start off. Like, if that was the case, you would never do anything, because you're never gonna know everything until you start doing it. So good takeaway
Exactly.
there. So
That's why there are realtors there are loan officers, there are so many people that are making a transaction work. So you're not just a set of eyes that are looking on that deal. Like, you have all these people around you, which have your best interest in mind. So you don't have to know anything by any means. You don't have to know everything by any means.
yeah, no, that's great. Okay, well, we'll wrap this up, but if they are interested in getting a DCRS loan, you reach out to me too. I'll put our link down below for that, and learn more. If you have any questions about lending, I'm always here to help too. But as always, thanks so much for watching, and we're here to bring you real life experience to all your real estate needs.